Hey guys, it's Mark here, and in this video I'm going to talk to you guys about what I've been doing over the last few weeks with regards to crypto. I'm going to have a quick chat about some of the business stuff I've been doing as well to earn other digital profits online, and also just do a quick recap of all the craziness that's gone on in the world of crypto the last couple of weeks with regards to the FTX saga, but also what's going to happen with Genesis. Are they going to go bankrupt? Is there going to be more effect and so forth? Let's have a look. Anyway, so I'll get on to what I've been doing in order to make a lot of profits during this time shortly, but just for a little bit of a quick overview, looking at the longer term view on Bitcoin and the US dollar. These lines in these graphs, I mean, I first drew them back about 6 months ago, and then I updated them in August, and then lo and behold, without drawing any more lines on the graph, we see that everything these lines here, I've not drawn those since back about here, yet everything is fitted exactly according to the long term of what has happened previously with regards to Bitcoin. It's been quite interesting how, all of this stuff happens in the news and all of this stuff happens in the world, and it all seems to just keep fitting the same rough picture. And that's not exactly a regression graph that other people will show you, because I've already shown in other videos that logarithmic regression graph, it only holds for a certain period of time. It will not always hold, just like with gold and with other markets. When there's a worldwide financial crisis and so forth across a lot of different sectors, those are the times when sometimes they don't hold. But we could see the setup for what's happening now when all the money was printed out of control over here, and we had this widening gap between the highs and the lows. And when the gap widens a lot, then it generally, when the fall comes, it comes back into line with the previous top and bottom of the previous cycle or half cycle. It's happened pretty much every time with Bitcoin, which has been quite interesting. Doesn't mean it can't go lower than that, but that would be a very, very bearish signal for the market overall for a long period, and we'd be likely to be stuck down there and not post a new high in the next cycle if we go below that. And that's about 9.5K. So according to this model, I remember saying at the time back in August, I don't think it's going to go all the way back there, but according to this model, perhaps we're on our way to, 10K, 9.5K. But I think maybe it won't go that far. But now that everything's been playing out, maybe it will go to there. Who knows? Who knows? But a lot of people ask me, why does Bitcoin get affected by all this stuff that goes on with altcoins? Like, why did Luna affect Bitcoin? Why did FTX and Solana, for that matter, during that time, why does that affect Bitcoin? Why doesn't Bitcoin just go fine and the altcoins crash all by themselves? Well, there are several different reasons for that, and it's important to understand it because it's also important the other way around when you see that these altcoins can have a melt up effect. When Bitcoin goes up, they can melt upwards, like as in, when I say melt up, I mean as in people that are leveraging shorts end up getting liquidated all the way up, and next thing you know, some of these coins 10x, 20x, 50x during a bull run, beyond what Bitcoin can do due to its market size. So it's important to know how they are all linked, and how that contagion occurs, and also important to know that they are much riskier than Bitcoin and Ethereum, any altcoin that hasn't been around for at least 6+ years. It always has its degree of risk for many reasons. Okay, so why does Bitcoin's price get affected? Okay. Well, traders of altcoins often use their Bitcoin that they have as leverage, especially the bigger traders. If they get a margin call on their altcoin that is crashing, then they have to sell their Bitcoin in order to meet that margin call. So that's one way. So people that owned a lot of FTT during the FTX scandal with Sam Bankman-Fried, some of them would have got margin called. especially if they can't access their FTT, and then hence they have to sell Bitcoin and other coins. And then there's contagion, the domino bankruptcy effect. What if certain firms had large holdings in certain altcoins that crash? Then they are forced to sell their Bitcoin in order to avoid bankruptcy. Or if they go bankrupt, then that causes another firm to go bankrupt or to have to sell Bitcoin, and so it goes lower. But also the automatic buying and selling by liquidity pools. There are thousands of pools like this. Here's an example. This is on the AVAX network. Bitcoin, and it's a wrapped Bitcoin, but it's still Bitcoin, and AVAX. So, it's only $3.5 million in this pool. People would say that's not much, but when you say that there are thousands of pools there's hundreds of millions, billions of dollars actually in these pools. So if AVAX was to take a crash, then what happens is as AVAX goes down, it automatically, with the pool, Bitcoin will automatically be sold to buy more AVAX. So they're there to help balance each other. It's there to help the altcoin not have such a massive crash. But if no matter what, that coin is going down, no matter how much gets bought by these liquidity pools by Bitcoin, if it's going down, it drags Bitcoin down a little bit with it. And we would have seen that in the Luna case. There were so many liquidity pools I was watching where it was automatically selling Bitcoin to buy Luna, even though Luna was just inevitably going to spiral down because Luna was being minted to buy the UST, and it was just an ongoing spiral that was just. It wasn't people selling their Bitcoin, it was the liquidity pools doing the automatic selling, which they're meant to do, but you're not meant to have this. I think people don't always think through this contagion effect. But it can also cause a melt up the other way when Bitcoin is going up, then faster than the alts, then it gets then all of a sudden it gets sold to buy the alts, and then the alts go up with it, and then people start looking at those alts going, oh, that looks pretty good, and then they start investing in it, and then next thing you know, there's people that were liquidated that were going short on the alts because they are weaker, they get liquidated, and then the alts end up going up really fast, and then sentiment takes over. It doesn't take much to push up a coin that has a low market cap, and they can often just go through the roof and end up in these big bubbles. Okay, so it can happen both ways, but these liquidity pools I've watched, there are so many, they can cause the whole market to move together as one. Why do people put money in a liquidity pool? Well, they feel like they've caught a good position for Bitcoin and AVAX at the time, and if they're getting 5% APR, they're pretty happy with that. So they think, well, I was already going to hold this much AVAX and this much Bitcoin, I'll just take my 5%, and while I think AVAX might go up faster than Bitcoin, I'm hedging my bets. Obviously holding AVAX alone might do better, but it might also do a lot worse. Whereas in this pool, it won't do as bad if there's a crypto winter, because AVAX would do worse than Bitcoin in a downtrend. So it's sort of a little bit of hedging bets as well, and taking some interest at the same time, getting paid out in whatever token it is on that place. In this case, Trader Joe, you'd be paid out in Joe, which you could still exchange for Bitcoin or AVAX or anything else. Okay, so Genesis has warned of possible bankruptcy after its lending arm suspended services last week, and they had a weekend of fruitless efforts. Genesis Trading has warned that it may be facing bankruptcy. They at first were trying to get $1 billion in loans. They have not been able to secure that. And now, finally, after a lot of silence, they've said they might face bankruptcy. And they are one of the biggest holders of Bitcoin. So that could cause a flush out. That could cause a big drop if they went bankrupt, due to both market panic and also if they were forced to make a lot of sales. That may not last long. That may turn out to be very, very similar to what happened back here. Try and zoom in on this a bit. Back here, it's like a black swan event now, really, all at once. What happened here with the pandemic? I mean, it's going to cause a lot of market panic. Combine that with the selling itself, you could end up with this quick dip down to the bottom. But look how fast, when you really find the bottom, look how fast it came back up. It could either come back up like that, or it could come back up like this, like that, okay? And that's not to say that we're off to the races, because this time when things flushed out, yes, it was the low, but we went up, we went down, and then we're off to the races. So you don't know. You may put in a lower high before we end up ever in another bull run. We don't know that, so pays to be careful. And saying that, we may see the low come in very soon, or as more and more impact of, let's say, if Genesis went bankrupt, once all the contagion plays out, that's when we'll see the low. So that could be within 6 months or less, in my opinion. Should be. But that's why it's important to be careful about these things. So why did FTX melt down? Well, according to Jordan Belfort, who's really summed it up well. Now, this is cutting out a lot of the details, but he summed it up really well for the regular person he's the Wolf of Wall Street, but he was in a Fox Business News article, and he was interviewed, and he was basically saying that Sam Bankman-Fried was using FTX basically as his personal piggy bank. He's basically saying FTX, it's not an exchange, it's like a brokerage firm or a bank that was holding customers' money, and they were basically siphoning it off. He was using it as his own personal piggy bank, Sam Bankman-Fried. People deposited their money in FTX because they want to trade, like any brokerage firm. So it would be the equivalent of, say, JP Morgan Chase depositing your money in their bank account, and then you find out that they are actually taking your money personally and going to Las Vegas and gambling it on the weekends, hoping to make a bunch of money. What's the difference? That's what was happening. He was using all of the funds that people were depositing, FTX, and using that as his own piggy bank. They bought condos. They bought whatever else they could. They were gambling on some wild derivative trading, hoping to probably make that money back, but obviously they didn't. So they were leveraging to the hilt. It had to end badly, is what he said. So as to whether the FTX investors will get their money back, he said, I strongly doubt that there's a lot of money left to be gotten back. And if you're leveraging the way they were leveraging, it's really easy to take these huge losses. I don't think they were very good traders, by the way, clearly not. And there was a lot more to it than that. I realise, before I talk about what I've been doing, I realise that there was the hack that went on, which may actually have been Sam Bankman-Fried. We don't quite know that yet, but it's starting to look that way. There was the hack that went on as it happened, and obviously the hacker has been dumping a lot of ETH as well on the market, which has forced ETH to be unnaturally down when it probably wouldn't have gone down as much at all if it wasn't for this forced selling and now the market panic going on. I know that there's other stuff that's gone on, but this is it in a nutshell. In a nutshell, a lot of dumb stuff has been going on by somebody that has actually ripped people off big time. One of the biggest scams of all time. All right. So what we're finding, though, is it's all part of the contagion going on from Luna, which probably caused them, FTX, to get into real trouble, which caused them to try and trade more, and they did it badly, which caused things to get out of control. Binance tried to went ahead and sold their FTT, which really caused it to collapse. A lot of you may already know that. But at the end of the day, lack of regulation is what caused it. And when regulation comes in, I do believe that will bring the market up again, because when you know that there are proof of reserves of everything, when you know exactly how an exchange is using its money, and you can see it, and everything is clear to regulators, much like how a brokerage firm has to operate in the real, with cash, you're going to be, as an investor, more confident. And the bigger investment companies will be more confident. Rather than putting 0.05% into crypto, they might put 5% in when they know what's happening. The enemy of anyone with large amounts of money is uncertainty. So there'll be a lot less possibility for any of these kinds of schemes and scams and rug pulls and so forth to occur. especially on a large scale, and that's actually going to be very important. So what have I been doing? Well, obviously, a lot of you guys know I already do a lot of online marketing of digital products. So I've got other YouTube channels. Heck, I've got I've got 300,000 subscribers over at Diabetes Smarts in the diabetes niche. Diabetics Talk is another one that's taking off quite nicely. I've got a lot of other YouTube channels in other niches that are doing very well. Some even bigger in between these two sizes, are bigger than Diabetics Talk, smaller than Diabetes Smarts. Not all in the health space, of course, in other niches as well. I've got products online like selling self-hypnosis tracks and all sorts. Here's a screenshot from one of my affiliate accounts. I promote other people's products, earn commissions. There's a lot of stuff going on. And I do believe that the number one thing to do when there's a bear market is to make sure that you have a way to earn fiat currency. So earn US dollars. Find a way that you're always able to earn US dollars. So that way, when the US dollar is having a good run, you're making US dollars. When the US dollar is not doing very well, they're printing money and stuff like that. Well, if some of your money is in crypto, like Bitcoin, Ethereum, then you're going to have a good run from that. Okay, so that's what happens. Some people say, "Oh, I thought Bitcoin hedges helps you against inflation." It does, while the money is being printed. The inflation's we're seeing the ongoing effects of inflation now, but it's during the money printing that it helps, not while the money has stopped printing. You get back to money printing, you get those interest rates dropping or staying flat, and all of a sudden you'll see a different side of Bitcoin again. So what have I been doing? Noticing weaknesses in altcoins. I've been seeing altcoins where they are too inflationary, like they print too much of their own coin onto the market, and or in their liquidity pools, they pair themselves with another coin that is moving identically with it, but that is inflating too much. So in essence, it's like that coin is inflated anyway. So coins like Harmony One and Avalanche, and I'm big on Avalanche in the long term, just in the very short term, it's fast. It processes transactions fast. But in the short term, with all that money and all those liquidity pools, there's a lot of inflation going on. So it was just a matter of looking and shorting the tops, really. And then during the latest downtrend, I've been shorting Matic because it bounced too high, in my opinion, according to my own technical analysis anyway. So it bounced too high. So anyway, I short from there. Now, how do I enter a short? Here's an example. Okay, this is last few days with Matic. I actually was shorting and taking profits before that, and then I started again about here. And as you can see, just before I hit record on this video, I started entering a short. Now, when I enter a short, I generally just enter with a position that I know I can put more in if it goes here and it goes here. So I have a little bit of leeway for just in case there's a bunch of traders out there wanting to try and liquidate shorters. Well, I'll try and enter a bit more. In this particular case, I entered here. I took some profit here, a little bit of profit here. Then I saw it bouncing up. I re-entered a short here. I was kicking myself for not re-entering there, but I did take out quite a large short at this point. And then I just kept taking profits at different levels on the way down, just de-risking, taking some profits. I do not look for the big home run. I just look to go, you know what, if I take some profit here and here, then I am still in profit if we end up back here, right? So you take a little bit on the way down, took profit. I saw, what if we're going to come all the way up to the blue line here, up to the moving average. Took profit here as well, left it at that. That was well and good, but then now just beforehand, I just noticed we're getting a little bit. I think that we may not hit the 8197 previous high. We may be setting a lower high. I thought it's a good time to take out a short, but I didn't take out a huge one. I mean, it's definitely in the thousands of dollars, but it's not a huge one. So it's enough that I can definitely see some good upside if we went down, but I'm also mindful if we went up, then I can layer into that short more and more. Like I did earlier on, not here, but a week earlier, I was able to layer into my short as Matic went up, and then took a lot more profits on the way down than I did in this little phase. So that's just an example. But I'm not saying go ahead and start shorting. I'm not saying that at all. But learning about how to read the markets, how to trade manually, can be very, very helpful. There are times when automatic trading can work, especially when you feel pretty confident you're at the bottom or close to the bottom of a bear market. Auto traders can be great for accumulating on the dips and taking little micro profits on the rises so that you make some profit while you're accumulating, in case it goes lower. They can be great for that. But in a bear market, you set one very high up, in a bull market, and then it turns into a bear market, you get caught in a bit of trouble. So I have found generally the most profitable thing to do has actually been manual trading, although some automatic trading has been helpful. I also highly recommend never putting more than 5% of your money into crypto. So no more than 5%, but if your 5% turns into 50% of your money, great, that's fine. I know some people that crypto is 95% of their money, but they never put 95% of their money into crypto. They grew it there. Okay, so it's a difference. If you made millions and millions and millions in crypto, fine, you grew it there, but you don't want to be, putting in more than you can afford to lose. So that's why I say 5% for most people is a good amount. And the time to enter, now is actually a much safer time to enter than when sentiment was higher. I think we might still go lower, but we might not. Whatever happens, we're in the vicinity of the bottom. So that's handy. I want to warn you, no one strategy works in all market conditions. It's a mix of strategies. If someone says that this one strategy works in all conditions, then, well, I'd be skeptical about that unless it's a very, very, very long-term play and they are not expecting to profit every year. That's difficult. But if you've got a mix of strategies going and you can switch from going long to going short as your primary mode, or if you're not going to do shorting, at least you know when you're in accumulation, you know when to take profits, and you know when to stay out of the market altogether, you can do quite well. For me, I still think that one of the biggest keys personally is that you understand how to read the markets if you're going to invest in it. Otherwise, you're better off investing in yourself. Invest in your own online business, earn some digital profits, or your own offline business. Invest in yourself. Okay, that's generally what I've seen make people the most. Then they may take some of those profits and put it into crypto or something else. That's great. Okay, invest in yourself's number one. Number two, though, just be very mindful about whether or not you are layering into longs or shorts. Is it more safe to be actually going short during this time, or is it more safe to be going long? And if you are unsure, then you are better off staying out of additional investments, because that's gambling. If you don't feel like you've got a 90% chance with the trade you're making, it's not worth making it. At least for the period of time that you're seeing it play out. Okay, so anyway, I hope that all makes sense. I hope that you've enjoyed this particular video. It was a bit of a mix of a market update, a few things I'm doing in crypto, a little bit of online stuff. And feel free to comment. Don't forget to like the video, subscribe to the channel, and we'll see you in the next one. Bye for now, everybody.